Peace, YouTube. Thank you so much for clicking on my video today. As you can see in the title of this video, this will be a more detailed teacup strategy. It will be the basic teacup strategy. Lisaldo Tavarez, who taught us at iMarketsLive the teacup strategy, he also has the advanced teacup strategy along with the inverted teacup strategy. So there's a lot of goodies that he has available for us with iMarketsLive, but I would like to just show you all the basic teacup strategy with some more detail. It's more detailed than the first video that I published about it. So what you see here on my screen is Great British Pound, New Zealand dollar. And I picked this pair because, as you can see, there are several cup formations here. So what I would like to do is just give you the simple basics of it and then just kind of zoom in and show you what Lisaldo Tavarez taught us. And his name is Lou. So I'm just going to call him Lou from now on. So this is what Lou has taught us. When we are scanning the market independently and we're not using the Gold Cup app, we look in the market for things that are bullish, bearish, and have a lower low. Just like that. That's what we're looking for. Bullish, bearish, lower low. And we can look for these types of setups on the 1 hour time frame, the 4 hour time frame, and the daily time frame. Now, some people also like to scalp and use them on the 15-minute time frame and so forth. So it is up to you how you see fit and what works for you. But here is some good examples also on the daily of some good teacups. So let me go back to the 1 hour because it seems to give us a little bit more information. And we can just take a look at a teacup setup. Let's find a good one. All right, so here's a good one right here. So on the 1 hour, Lisaldo teaches us that when we're looking for a teacup, so before this teacup would activate, you would not see any of this stuff behind it. You would be looking at the setup right around here in this area, because price hasn't pulled up to this level yet when you're looking at the market. So I'll show you on a higher time frame, but just for the sake of conversation and for the educational purposes, I'll show you on the 1 hour time frame. Now, what you will be looking for is a bullish candle, a bearish candle, and then a candle below that bearish candle that has a lower close. So this one closed here because your candle doesn't close where your wick is, your candle closed where the body is. So you have a bullish, bearish, lower low candle. So you would come over here and grab your horizontal line or horizontal ray, whatever you feel comfortable with, and you would lay that right there on top of the body of that candle. Now, what will happen is that you'll wait. You'll wait 1, 2, 3, 4, how many ever hours this is for this to activate. You will set a sell limit right here, because what you're expecting to happen when price hits this price, when price returns back to this level, you are expecting price to come here and then drop off again like it did here. Come here and then drop off again. Now, Lisaldo, he teaches us with the teacup strategy that on the 1 hour, the 4 hour, and the daily, that teacup is only an active teacup if you get at minimum 25 pips if you're at the hour, 4 hour, or the daily, and that you don't have a stop loss more than 30 pips. So if you were to take this teacup, then you can see right on the body that we would be at a 31 pip stop loss. So in the teacup strategy, this would not be a good teacup to take. So what would you do? Would you just give up on teacups and say, oh, the strategy doesn't work? No, you could, especially if you're new and you are managing your account appropriately and not over leveraging. If you gave yourself maybe 40 pips just so you can manage your entries and exits. Sometimes, being precise with the entry and exit can make all the difference. Sometimes if you give yourself a little bit of wiggle room and say, you know what, this is a bullish and bearish candle, but we also have, you know, some wicks on there. Do I want to give myself a little bit of wiggle room and put it like in the middle of the wicks? These are some of the flexibilities that you have when you do this. Because in reality, you will hear other people talk about market makers and stop hunters and things like that. The price is going to push up, and if you have stop loss pending orders there, the brokers can see that, and they may just kind of push up and grab those. So if you just want to give yourself a little bit of wiggle room, maybe give yourself a 35 pip or 40 pip stop loss, some cases it's very worth it, and this is an example of where. So not to modify Lou's rules, because his rules work for a reason, and some people don't have the account management skills and they over leverage, and to tell people to do a 30 pip stop loss kind of keeps people from over leveraging and doing things that could blow their account. But if you don't over leverage, you have a little bit more wiggle room in your account, then you may want to do a 35 or 40 pip stop loss, just so you can ensure you give your trade enough room to grow, or wiggle room to move around in that price area, and when you're ready for this drop. Now look at this amazing drop from this teacup. If I can get it together. Hold on a second, guys. I don't know why that took me so long. But that like is a 300 pip move. And let's just say, you know, you're used to trading with structure. And you're like, you know what, I'm going to put it in, but I only want to get 25 pips because that's the minimum that you were required, or what makes a teacup valid in Lou's training is that you get 25 pips minimum. Well, you blew past that quickly. Like, that's about 25 pips right there. You blew past that quickly. Then you say, okay, well, I want to take a second take profit right there at structure. So at structure, you're at 141 pips. And say if you would have taken partial profits off of the table and just, you know, wanted to ensure that you got partial profits off the table, but you want to leave, you know, a portion of the trade in there because, you know, everything's still going good. You're still below your 8 moving average, and you know everything is saying, yeah, let's just stay in the trade. And you stayed in the trade until you came all the way down to 345 pips. So you could go with 35 pip stop drawdown for 300 pip gain. That's worth it to a lot of people. I know a lot of people who would definitely take that trade and be totally in love with that opportunity. So that is one example of GN with the teacup for us. So let's look at, you know, another time frame. Let's look at the 4-hour time frame. So on the 4-hour time frame, let's see what we got here. Let's find us a teacup. It's kind of hard to eyeball it when you know, this isn't your pair. A lot of people have pairs that they like and that they usually trade. And my pairs are UJ. No, I'm sorry, not UJ. GJ. GJ. I like GJ, and I like Great British Pound with USD, and I also like Euro USD. So those are the 3 pairs that I usually trade, and I can kind of just know what's going on with them by looking at price. So excuse me for taking a little bit of a second to find a teacup, but I think I found one. So right here we have a bullish, bearish, lower low candle. So just zoom out for you. So you see bullish. Bullish means it's going up. It's a candle that is going up. Bearish is a candle that's going down. So your green is bullish, your bearish is red. So you have a bullish, bearish, lower low candle. Lower low means you have a lower close beside the candle beside it. So bullish, bearish, lower low close. You would come back around and stick your horizontal line right about there. Oh, that's not the line I like to use. Sorry, guys. I like this one instead. You stick that about right there. All right. So some people would stick it right there and stuff like that. And one thing I would also like to suggest, when we are taught the Teacup strategy, because there are so many opportunities and there are a lot of pairs that are called out and that are ran through the scan, a lot of people will just set a sell limit in their brokerage account and just set it and forget it. And I think that that's a wonderful opportunity. Definitely look into it if that's something that you're interested in doing. But I also want to make mention that you might want to set a call level or an alert with TradingView, just so you won't have pending orders and something could go different in the market. News could come out. There could be a weird spike. You know, if you're part of iMarketsLive and you've had a class with Lou, or you've seen any of his classes on YouTube, then you know that he uses the 5 and the 4 moving average. And usually if they cross on the upside, then it will invalidate your Teacup. So these are little idiosyncrasies that you will learn as you continue to grow and learn more about the Teacup. But the bare bone basics is bullish, bearish, lower low. You put your horizontal line on top of the candle, on top of the candle's body. Now, because it's a 4-hour time frame and we had a 3-pin pattern right here, I would suggest, or I would feel comfortable with, setting a call level alarm for the price in that area, and just to see what you have there. That's what I would do, because this 4-hour candle, it could have been very bullish for 3 hours and 55 minutes, and the last 5 minutes of that 4-hour candle, it fell down like that. And if you were sitting there, you already set your limit and it was just pushing and pushing and pushing, you could have hit your stop loss. Could have been so many things that happened. So sometimes if you set a call level, you're able to watch and monitor and have a better entry and exit. So this is looking like, with that drawdown, about 11 pips. So you wouldn't have been too bad off. And this is a better example of pretty much a perfect Teacup. So even if you were to put it directly on the body, because you were a little concerned because you were doing the basic rules to a T, or if you gave yourself just a little bit of wiggle room and put it about there, you would have been just fine. So this is a perfect setup for an awesome Teacup. So you have bullish, bearish, lower, low. And just so you can see how it's drawn and how it looks really pretty technically, we're going to do the arc right here. So we're going to put this right over here. We're going to bring this down right about here, the bottom of that structure. You know what? I do that every time. I do that every time. But there we go. So you see there, it looks like a little perfect little Teacup. So you take your Teacup and then tip you over and pour you out, right? So that's what we're getting with the Lisaldo strategy. We're getting the pour over, the handle and the pour over, or the spout and the pour over. So let's see how many pips that is. Now, if you just came down to structure, your first structure would have been 136 pips. If you would have come down to the last area, the second area of support, 183 pips. And if you would have just let it keep on going, you could have let it come all the way down to a major area of support, and you could have been up in the area of 230 pips. That's pretty amazing off of one Teacup call that can pop up on the scanner. Or if you are freestyling it and doing it by hand, you could have found that pretty easily. So that is some of the more detailed information of the Teacup strategy. So what we went over today, we went over the bullish, bearish, lower, low, or you can have a bullish, bearish, lower, high, just basically meaning that it is a candle that was pushing up, but it still closed below the previous candle. And you learn that you would place your horizontal ray or your horizontal line on the body and or mid wick of the the teacup formation, on top of the candles that are forming the teacup formation. And when price hits that area, you know to one, either set a sell limit so it will just activate, and when it hits that price, it'll activate and you can just ride it all the way down. Or you can set a call level notification, and you'll receive a notification on your phone to say, hey, Great British Pound New Zealand has hit price 1.94389. Go over there to your computer or your cell phone or your iPad and look, do you want to enter that trade? So you can do it that way. Another thing that's good about the teacup is that it's science too. Well, I don't know if it's science, but there is a technical aspect of it. And say you missed this. Say you missed it, you know, when the call level hit, you were in a meeting or something of that nature. Oh man, you missed it. Well, guess what? You had another opportunity to enter the market when price came about right here. Now, you may think, well, how would I know that, you know, that's my next opportunity to get into the market there? Well, that takes practice for sure. But you also have to, and that takes practice, and you also learn that price likes to retest. You see that? Retest, retest, retest. All those wicks just wanted to retest this price. So with you taking a look at that, you can say, you know what? I feel like I missed this. By the time I seen it, price is all the way down here. Oh, darn. But you can look at your structure and you can say, you know what? Let me take and block this area off, because this is where I got a lot of wicks. Let me block this area off, right? And as soon as price hits the base of this little zone with all these wicks in there, I'm going to set a call alert to see if I push past that. If you push past that with a bullish engulfing candle like that, then you may say, okay, I may get a new entry there. But if you see that price is not pushing past this area and you're kind of staying trapped within this barrier, but this is maybe a good place for you to re-enter. The thing about the market, guys, is that all these candles were formed on 4 hours. So if you see that you missed this or something happened, you fell asleep, and you're like, well, I know that price is going to retest because that's just what price does. Look at this. Goes up, goes down, retest. Goes down. I want to see if I want to go down. So for 4 hours, this candle poured down. And then it closed. And then it opened back up right there. And then it pushed all the way up. But it had to come down here first and try and test that area again. It tried to test the area again before it takes off. One of our master traders, his name is Steve Gregor. He calls that pass and check. It's going to pass by the price, and then it's going to check it again and be like, am I sure I want to leave price up there? Yep. So that's also called a demand zone. This is your supply area. Forex has a lot of synonyms, a lot of words that you will hear people say that mean the same thing. So I hope that this video has given you some more nuggets on how to, you know, use the teacup strategy and be successful at it. Here's an example of where the teacup did not work. And this is where you can say, well, what happened? Was it the news? Did lose 50 and 4 moving averages cross? I don't know why this says 7, because I use the 8 moving average. So let me just go ahead and change that while we're doing that. But so something could have happened to cause this spike up and to cause this teacup to not follow through. But you got to see price test it. And did it test back here in the past? It sure did. Look at that. You look to the left, you see retest where price slow down right there in that area. It's amazing when you can step back and easily look and see things and point them out. So he's saying, well, why did it fail there? Because it tested, broke down, test, broke down, test, broke down, test, broke down. after it tests an area so many times, guess what, guys? It's going to break through. So after it tests and broke down, right? And this wouldn't be a this is really messy. This is really messy consolidation. So I don't think anybody would look at this and be like, oh yeah, let me get in for a teacup. There isn't one there. So see, it's like bullish, bearish, lower, low, like, you know, there's nothing in there for you to do. So there's a lot of consolidation, but price was still at that level. So when it hit that level again, it pulled down, hit another area of support, and you can see that it's all zoned up right there, another area of support. And then when it hit that area of support, it took off of the resistance of your previous teacup. Look at that. It created a doji, and then it took off. So could you have grabbed a teacup here? Let's see. Let's just see. Bullish, bearish, lower, low. You see that spike up right there? I think that's probably more than 30 pips. Yeah, buddy. That's 180 pips. So yeah, that was a complete and utter failure, guys. So just so you know, teacups, the scanner goes about 8 out of 10, 9 out of 10. So when it does pull out good teacup strategies and teacup ideas, it has flushed through some of these things like the 50 and the 4 moving average crossing and things of that nature. So they're pretty good probability setups and trade ideas, but here's a great example that nothing is 100%. Okay, guys, I always want to be the coach, the Forex person that you look at, cryptocurrency, whatever it may be, that keeps it real with you. Yes, you can make awesome amount of money. You can learn so much. It's great. It's wonderful. I would never take anything away. But if you don't be careful and you're not aware of what you're doing and how you're trading, then yeah, you can have things that cause you to fail. But what your safeguard is your stop loss. So say you would have put it in and you didn't do the call levels and you didn't go back and check and you just kind of wanted to just jump in and set it and forget it. If with proper risk management you only did a 30 pip stop loss, you're fine. You close that trade, you take your loss, and then you go and trade another day. So I hope that this more detailed video of the basic teacup strategy is helpful to everyone. I hope that you're able to replay it and see something and use it again, and you know, share it with your teams and your friends that are interested in Forex and trading. In the link below, I will have my Forex fundamentals Facebook group listed. I will also have my link to my iMarketsLive organization. If you are ready to go ahead and click that link below. You will have me as one at holding your hand through the process to make sure that you're profitable, and you have the full and utter depth of iMarketsLive, which is amazing. So without making this video uber super long, I'm going to end it here. And if you have any questions, please put them in the description box. I'm sorry, in the comment section below. Until next time, you guys, peace YouTube.